For more on this, we're joined by Ibrahim Suffian, who's director of the Merdeka Center for Research in Kuala Lumpur. Welcome back to the programme. Now, the interim ceasefire between the US and Iran is formally set to expire later today as talks to reopen the Strait of Hormuz remain deadlocked. What's the realistic price ceiling here if supply disruptions persist?
Well, I think with the formal expiration of the interim framework and the looming sanctions by the United States, I think many analysts are looking at benchmark crude prices, and it may face very steep upward pressure. Some are saying that it is likely to test the $100 to $110 per barrel threshold as the physical supply bottlenecks continue to constrict global inventories. And I think if we look deeper into this, there are also limitations on the shadow fleets. There are currently covert ship-to-ship transfers, which is an alternative to overland routes that are now apparently running at maximal operational capacity. But this can only handle a fraction of the massive deficit left by the restricted traffic at the Straits of Hormuz. And so I think we are looking at potentially an economic breaking point, because this gray market logistics that are complementing the shortage of supply cannot indefinitely sustain industrial scale energy flows that the world demands. And so if spot prices breach $115, $120 per ceiling, acute demand destruction and manufacturing slowdowns will trigger worldwide issues, and that we probably will have hit a very hard structural ceiling.
Meanwhile, the US's strategic reserves are heading towards levels not seen since the 1980s. Is releasing these strategic reserves becoming a liability for the US rather than a buffer against a supply shock?
Yes, the U.S. Petroleum Strategic Reserve is potentially now plunging below the 300 million barrels mark. And this is a 43-year low, driven by very aggressive drawdowns and supposed to be pressuring Iran. But I think the obverse is potentially happening. I think there are two problems here. Number one, there is actually a physical geological problem because this oil is kept in storage caverns, salt storage caverns. And as the supply becomes depleted, there are actually structural risks that these caves will actually destabilize and could potentially collapse and then have long-term impact or losses in the national storage capacity for the United States. In the short term, I think Washington has clearly traded their long-term resilience for short-term price relief in order to protect their domestic consumers. This is essentially a very high-stakes gamble that strips the U.S. of critical geopolitical leverage and leaves their domestic economy defenseless against future supply shocks.
Right, and as oil moves higher, we're seeing natural gas prices falling by more than 3%. What's driving that decline?
Well, I think at the same time, industry is also cutting back in terms of consumption in order to address the shortfalls that they anticipate to happen in the market. So not only are the supplies for petroleum dwindling, but I think that in the other sectors for natural gas, which is consumed by energy producers, that's reduced as well. At the same time, we are actually in the northern hemisphere seeing summer months, and a fairly warm summer in certain parts of the world, especially in Europe. This has an impact on the usage of LNG at this point in time.
And as the US prepares fresh sanctions against Tehran while simultaneously depleting its emergency reserves, is the US running out of economic and emergency policy tools to contain the impact of a prolonged Iran conflict?
Well, I think there are certainly limitations in this space right now. And I think in the region itself, we are seeing that the countries around the Gulf are also, finding other ways to work around the hostilities and also the conflict. I think we are seeing essentially tactical adaptation as opposed to an overall strategic rupture. We see that Iran and Oman coming up with a separate track in order to de-escalate and allow for restoration of basic maritime rules in the region. This, I think, opens up an opportunity for other countries in the region to latch on to a new multi-alignment arrangement, no longer fully dependent on the US, but not completely alienating the US, but working with other countries in the region in order to restore energy flows and their exports to the rest of the world.
Ibrahim Suffian, Director of the Merdeka Research Center, thank you very much for joining us.